Okay, good evenings, members. Welcome back to another episode of Bursa Thrive, 2022, 25th September. Okay, so as we know that last week, the hot topic of a super high interest rate has been raised, not super rich, super high, like just only a basic of 75 point. As many, I think a lot of how to say, the market is already predict at this range. Okay, but now the question is remain is how much further Fed will continue to raise the rate on the next coming meeting in November. Okay, so tonight we will share something finding based on my opinion. Okay, how I think that the interest rate here is not only fighting for the inflation. I think it's more on also part of a plan to fight with China. Okay, so before we go into that one, we will go on to the our chart first. Okay, so this I know on last Friday closing, the another rough of a big drop, not a big drop, like it's actually this is drop until quite about 800 point below, okay, before the rebound. Okay, so this one I need to switch to we see it in a half-minute chart to see the rebound. Okay, so as we can know that during the Powell speech on midnight, Malaysia midnight, about 2 a.m. that time. Okay, so in the US, the share market did not react after Powell speak anything, because before sometime when he's before speak anything, okay, so the market will be react like rebound first. Okay, and after that, so something wrong somewhere, certainly the market has been dropped. But however, on Fridays, okay, things look a little bit different, because the what we can see here is the all this thing, but the thing is still continue open and go down until the end of here as a have a rebound. Okay, before that, so you can see here is the last hour. That means this is because it's a 30-minute chart. Okay, so this is the 1 hour before the closing. Okay, so actually this closing is after I thought is a strength is coming in, because we see the volume also pick up at the end. Okay, at the end, something like like for like going to have a support of a rebound in the look like forming an SP. But after that, I go to check back is the but however, this is a Dow Jones, because Dow Jones and S&P 500, the short position is almost the same. Okay, so this is almost it. And what I saw a high volume of put volume. Okay, this is the put volume. This is the put and call volume or ratio. Okay, so is it let's say example, sometimes the put volume is higher than the call volume. Okay, so this means a lot of people is already in position in put. So if the market drop, more people will be positive profit. Okay, so but however, what I then, and this is a put and call open interest. Okay, so US actually their future market or ETF, they got a lot of the market is quite open, so a lot of data you can collect, compare Malaysia. Okay, so this is some data that I found out. Okay, so because this is the 23rd, this is the expiring date of their put volume. So during that day, if this put volume, that's mean in short position, if they don't close their position, this one will be a not will be all getting expired already. Okay, so once because of that, I think it caused a last minute rebound on three major market. Okay, so this is an example like our when we see this thing, that means the buy or last minute buy out actually is not genuine, because of contract only. Okay, so furthermore, from what we can see the following day on the 26th, okay, the put warrant is higher than the call warrant. Okay, so that means this one will also create a buyer here. Okay, but however, is it this one will get down to buy first, or is continue open, but this thing is already been buy out. Okay, to close their position. But up. Okay, so but after that, when I see until October and November until September end also is not many put and call warrant already. Okay, so I think the market might be the drop might be a slow and moving sideways at this moment because no news. If no news, okay, what will driving the market at the end pull out or pull down, okay, is all this closing put and call contract, okay. So that's why this one I can read it as not a strength here because it's just only a closing contract, okay. So what we can see here is that the measuring direction of 200 moving average is still up here. This is for 30 minutes. And this is a 20 moving average and 40 moving average is still toward downside. Okay, so all is toward downside. So so far I think that is next week will be a high probability that what I forecast is the things might be continue to be drop. Okay, so that we need to wait until you suddenly Fed got to do with the interest rate or any good news coming in to support the market. If not, now the market will be start pull down by the gravity. Okay, we call it gravity pull down. Okay, so from the interest rate, okay, so I have some data here is regarding the overall of a 200 year in interest rate history of a US. Okay, so but I really this is a one of the opinion that I found at this one I used to use this one. And when we are see on 1981 that time, okay, so a super increase of Fed Paul Walker, okay, so this one is a very famous name, okay, so because it's what he did for the interest rate rocket high to cut out the inflation. But of course, during that time, the inflation is really not coming down. It's become sell stick because they say like a very sticky already. So that's why they need to have a high interest rate to cover it. Okay, but coincidentally, during that time, US and Soviet Union. Okay, this is the Soviet Union. Okay, by that time is having a super we call it a Cold War. Okay, during the Cold War, US is during that time is already announced the same like now lah. They say Malaysia is not Malaysia, China is the top number one enemy. Okay, so now same with during that time is Soviet Union. Okay, US do whatever they can to make sure the Soviet Union has been taken over, okay, by there's been lost to US. Okay, so by that time, coincidentally, during the time when the US is using finance USD. Okay, they call it like this war. Actually, this is calling for currency war. Okay, this is a currency war. Okay, currency war. But during that time, Russia or Soviet Union by that time did not have a heavy reserve of USD actually. So by that time, US using this technique has already made Soviet in high debt. Okay, so you can check back a lot of data after 1981. Okay, 1981 immediately is the Mexican debt crisis. Okay, Mexican debt crisis, and before 1980 when the rate is already on the way moving high, is in 1980 is Latin America debt crisis. Okay, this is the debt crisis already started when the the interest rate has been slowly moving up. Okay, this is something that is very dangerous and might facing now. Okay, if interest rate now continues 75 and the next coming another 75, okay, or at the December becomes 0.5, this one I think it will be a very dangerous level. Okay, but however what I notice is a lot of time US can use the tax reduction China product, okay, to reduce the inflation, okay. But however, I do not know why US did not do this, okay. Until now, tax on China products still continue all, okay. And also a lot of US, I think they also know that this inflation is not only purely on this strengthen of a dollar. Actually, it's a supply, your demand ratio, your supply, okay, your supply, okay. So if you continue to give weapon to the Ukraine, or and continue with Europe to do the same thing to the Ukraine, okay, the war of Ukraine and Russia will be continued. So this supply and demand sure will continue, okay. So sure will continue. So what I found is why I think the US is more genius is there, but why still choose this route? Actually, is now I think is of course now they need to fight China. Okay, China we have know that especially housing loan. Okay, also the housing loan is a big debt in China citizen. Okay, housing loan. Okay, so whenever housing loan burst, okay, this will create another bigger Lehman Brothers case. Okay, so I think this is what US want. Okay, so to continue battle against China. Okay, so now is taking that is US become recession first, or China debt crisis burst first. So I think the interest rate if what I my opinion is, okay, so the increase there will be a possibility the next coming interest rate will be increased another 75. Okay, so this is based on the, let's say, the real agenda of a inflation rate increase. Actually is not only for inflation, actually is targeting China. Okay, so US already announced that China is the number one enemy. Okay, so a lot of their tools they can use, they will be toward this thing. Okay, so but there cannot be like a barbarians. Okay, say that or China like that. Okay, attack like this. They need to be covered by something like using an inflation. Okay, this thing might be the same thing when they're using a same weapon against Soviet. Okay, but only a difference is Soviet by that time the foreign fund the foreign fund is not foreign reserve. Okay, foreign reserve is not really strong as China now, because China foreign fund or foreign reserve is the highest. Okay, foreign reserve of USD China now is the highest. Okay, so I do not know this war will be continue how long. Let's say now another 75. Okay, by year end another 5. Okay, and certainly by the start of the year still continue number 5. Okay, and if the interest rate continue until 7%. Okay, so I did not know what will happen to the market already. I think the recession happened and everything might be start to collapse. Okay, so this is some of my opinion. Okay, but this only need to be extra be careful, because if the rate is going to increasingly going up, okay, so the market rebound is always temporary. Okay, so this is some sharing about the interest rate. Okay, so now we are going to move on to Hang Seng Index. Okay, Hang Seng Index as we have know that it's already dropped below to the quite a big support here. Okay, this is the last how to say is the last very how to say very solid support level, but it just break it like that only. Okay, 2 days when you break. Okay, well, what we have know that why this thing break easily also is because Hong Kong has been increased the rate 0.75 or same like US. Okay, so we also already know that Hong Kong people, okay, so their debt in the debt on their housing loan. Okay, the housing loan is quite high. Okay, the housing loan is quite high. Okay, the housing loan is quite high. then anything of increase, something like this actually is very, very bad for the economy. Okay, so that's why we see a outflow also, okay, from this market, Hang Seng market. And you can see if you try to move back, let's say we are using a weekly chart, okay, weekly chart. So Hang Seng Index actually has dropped back to this 2016, okay, level. There is a world far more worse than the COVID, okay, and also the same of this same level is happened in 2011, okay. But however, when you are seeing a chart like this, okay, so it intends to have some is in a level that if you say that in this level you still to continue short, not recommended to buy and sell. Okay, just sharing some opinion here. If you continue to short at this time of a level, it will be very, very dangerous also. Okay, we do not know whether that it will be happen something like this. Okay, like this one it happened like in the crisis of Lehman Brothers. Okay, so this one will be how to say, what we have know here is the debt crisis burst lah. But if the things burst, of course, if the news burst in the next few months, okay, this one might be happen. Okay, if the debt burst in China or Hong Kong, this one will be happen. Okay, or the debt crisis happen in Europe. Okay, Europe also in debt crisis now. Okay, so this time is different with last time hyperinflation era, whereby the burst of debt is happen on Mexican or Latin America. Okay, but this time the debt is now in the front door of a European or Europe country, and going through for Hong Kong also. Okay, but the debt that is the reserve they still have, but still have some bullet to defend it. Okay, but however, when you drop into a how to say a zone that is whereby is already it look like it's all going to rebound if nothing is happen. Okay, if no a big you to deep down more further, you need to have a permanent debt crisis. Okay, a financial crisis is already openly no, only this one will drop further. If not, I think slowly rebound up will be happen. Okay, slowly it rebound up, and only after rebound the crisis of a debt come, only they will come down again. Okay, so at this position now, my opinion is advice once it's dropped to we call it call it no, this is like a hollow zone. Okay, that's mean after a few years one this position is nobody there, no one's land here. Okay, so it's buying technically is going to rebound. Technically is going to rebound. Okay, so but only a massive of or a crisis or debt is coming in, only you can see this thing is continue drop one. Okay, so or it's more like a sideline. Okay, so for Hong Kong situation now, better don't my advice is don't trade anything yet, because both sides also have some risk, because based on a chart analysis technique. Okay, we are now you drop into a somewhere there is a no reference one. Okay, but however, based on this one, we can do also an analysis on the interest rate. Okay, so this is a comparison between Hong Kong, Malaysia, and US. Okay, what we can see here, US is already latest one, already go back to the rate that is almost same like during the crisis. Okay, Lehman Brothers crisis. Okay, in 2028. Okay, and also what you can compare here is in the Hong Kong one, the one also is go back to the rate that is 2008 already. Okay, so that's why this Hong Kong the rate is doing of all these things equivalent like US now. Okay, but however, what you can see here is Malaysia. Okay, for Malaysia, if we go back to the 2008, actually our interest rate is about 2.5 here. So in Malaysia, OPR announced will be only left 1 day. Okay, for this year, US will be in November, and another one is in December. They got 2 times. Okay, so Hong Kong one is also got 1 time. end of November, end of November, somewhere like that. Okay, between December. Okay, so this one is only got one time. We are also the same in November, only got one time. Okay, to review it. Okay, but that's why Hong Kong now is already review this one. Okay, so if one here might be a review another 5%. Okay, if or maybe close to another 7.5%. If US is 0.5, 0.5, okay, 0.5. But Malaysia one is already lagging, not up to this level yet. Okay, with currently now we are lagging about 1%. Okay, if OPR is continue to be in 25%. Okay, so with others country is moving much more faster. I think ringgit Malaysia will become a disaster. Okay, ringgit Malaysia will be quite the value will be dropped more for some more. Okay, but because of OPR, why we cannot go up too fast? I think is also our elections condition. Okay, because this one it will be not good for a loan. Okay, so this means once OPR up, you need to pay more loan. Okay, so Malaysia is already in a very well, my opinion lah. Okay, don't cannot say that it's because all the our finance minister still say that everything is okay, everything is good. Okay, so hopefully everything is good. Okay, so because what we have seen here making me worry also. Okay, so because the OPR, the OPR is have gone back to this level. Okay, it's 3.5. Okay, it's still okay. Okay, it's still okay. Go back to 3.5. But if continue US going up, okay, and Hong Kong also going up, we might reach back to 4.5 or 4%. Okay, so if we go to 4% or 4.5%, then our loan to pay on we have a lot of enjoy a small low interest rate or low interest rate wherever people buy in a low interest rate era. Okay, now you need to pay very high OPR to meet the interest rate. You need to pay more. Okay, so this one also will be not good for our housing loan debt and also business loan debt. Okay, so when we are come to a debt, okay, what we have quite worry about Malaysia one is this one you can easily type it. Okay, the H1 MDB debt. Okay, once you type it one in MDB debt, you come out some old data. Okay, so this is June. Okay, our debt of 1 MDB is 33.08 billion. Okay, so this one when we are making a loan with 1 MDB is around 3 ringgit 20 3 ringgit 4, I think, around that. But now already 4 ringgit 57. Okay, so what we have loaned by the time now we need to pay more. Okay, so that means this figure compare now is already increased. Okay, and one thing is also a shocking, not shocking lah. Okay, so it's because of you can type here actually Malaysia wait when backing this 3 billion alone, because this why is saying backing is because of okay. So it's why is saying that it's a weight or backing this loan is because of this the 30 something billion. Okay, is not in our GDP. Okay, where is it idea? This is also from Tunku Jafru. Our say okay, this one. Okay, this one. Okay, this one. Okay, federal government debt amount. Okay, we are now in a debt of 1045 trillion. Okay. Oh, trillion. How much is trillion? I really didn't know. Okay, so it's 63.8% of GDP. Okay, but however, the shocking one is this 1 NDB that is not included. That means 36 billion of but they also look like very clever. They use this ringgit Malaysia. Okay, you ringgit Malaysia. Okay, so when you see the ringgit Malaysia, it look like it's stable. Actually, when you convert to USD, we need to pay back in USD. Okay, we are borrowing USD also. Okay, so this federal government debt is still not included in the 1 NDB. Okay, so when 1 NDB all in, okay, we need to pay. That will be some maybe a big some will bring some how to say some risk or some burden to our Malaysia foreign and our income to eat into our GDP one. Okay, so hopefully we have a very good hopefully the financial ministry is doing their best, okay, to protect Malaysia so that we might be have not okay, still can enjoy a very softer impact on all this. Okay, so after that one, I will move into our this is we got the Malaysia, okay, Malaysia FKLCI. Okay, so this is we are using futures. Okay, so we can know that all market has been dropped below the July how to say the this level. Okay, so this level, why they are all dropped below is because the interest rate that is already reviewed higher. Okay, but Malaysia still not increase aggressively yet. That's why we still have some room here. Okay, so we have some room here, but this room is talk about 20 point only. Okay, 20 point only. I think it's in Monday, I think there will be some gap down here and rebound, and is it will be get down more lower? This one is still a question mark. Okay, so this look like the whole overall market is still continue going down. Okay, if no news coming in, I think the market our foreign investor will be continue moving out. Okay, so because of the interest rate is enjoying in Malaysia is far more lesser than Hong Kong and US. Okay, so what we can know here in the trade BSA 360, we also found that it's the foreign fund is already getting heavier to leave Malaysia. Okay, so I think that the market is now already in the downtrend. Okay, so in this downtrend, myself I'm still holding a short contract. I'm holding it in 1490. Okay, so between now it's almost around 69 point already dropped to almost 69 point. Okay, so this one I still holding. Okay, because we still got 1 week before the contract can need to be closed. Okay, so when we will close it, then to close my contract, I will become a buy. Okay, I will become a buy. Okay, so that's why if become the last day of the week, if the things still drop, okay, sure, when we need to close the market, I need to become a buyer. Okay, so we'll be last buying, last minute gap out. Okay, so that's why sometimes you see the last minute gap out. You need to be careful. Sometimes it's, even though it form like a spring, okay, it's not a spring, you need to know that the reason behind it. Okay, if stock market is different, if stock market, because stock market did not have the short position to close. Okay, but for futures market or index, okay, you need to make sure the SP has been confirmed. Okay, so if anything, SP here is certainly the open day the next day still going down. That means this SP is already failed. Okay, if failed, SP will be not a good sign also. Okay, so this is for Malaysia market. And for next week, I think you are also not selecting any stock, because if you select a stock, by the time he going out, is to attract you to entrance. Let's say example like this like this one is like a RGB. Okay, so it looks like a very nice setup. You have a long accumulation, then you have a very good rebound. Okay, so the same thing that you can see also in CYL. Well, also the same thing. Okay, you have a very long sleep. Okay, suddenly people is going out. Okay, but you did not know when they are want to raise out the net. Okay, so if you jump in much more earlier, then you sell here or sell here, then you are if you target in a short term, then it's okay. Okay, you can get your a very good handsome profit. But this one, the sell down, okay, that can happen here. That one also can happen here. Okay, you did not know. Okay, you did not know, because once you buy, you did not know is it a lot of people is getting buying already. So if a lot of people jump in, you not just jump out, they will take profit on all these fish that raise out the net. That will be a problem. Okay, so I'm not saying that this one will drop back to here, but it depends how the smart money sell lah. Okay, if the smart money sell until here, they already sell off. Okay, so a lot of die-hard fans still did not sell, and hopefully the rebound, then the market might be come down, go up and sideways here lah. Okay, so but however, it's quite dangerous to invest some stock like this. Okay, so I won't select anything share here lah. Okay, but we need to wait until the storm is over. Okay, only by that time we can focus a lot of a good value stock in the market. Okay, so some actually you can get it here is from the premium menu. Okay, premium menu here. This one is the intraday one. Okay, I just want to show you some of the features in this trade. BSA is quite very good. Okay, I forgot the way they put the okay. Is this is a sector analysis scanner. Watch and learning assignment. There is one of the learning. There is a lot of group of watch list you can go through. Okay, so example like this, you can go into a KLCI company that have a yearly good earning and strong profit. Okay, all this stock is here. Okay, so all this stock is a stock that you can analyze, you can watch first and wait until the prices come, then you can go for investment, because all these 174 by their report or anything, let's say, okay, so it's quite very good. Okay, because all this company is a value, is a in their position is in a good value. Okay, so need to re-enter again. But now this one I need to refresh again. Okay, so I refresh the, but this one is all this stock. Okay, so you need to have some you wait until it's drop is quite low. By that time only you can go for so I need to re-sign in again. Okay, anyway, this one we can also check with a chart. Let's say as Sitecoin. Okay, this is a shipping company that is quite very good fundamental. Okay, so when you see a fundamental, okay, when they are rushing like up and pull back, and it will be a rebound. Okay, but however, this one is already create something like this. Okay, so I like going to sideways, or you're going to come down again. Okay, so but however, all this stock actually is fundamental is quite good. Okay, so you can wait until it's coming down first, only you can start to reinvest. Okay, so this is a good stock. It's not buying now, but it's a good stock that you can have a look. Okay, so for today's I will before I end, I will go to have some basic talk about this is a CPI. Okay, CPI actually is something that is how to say, is a comparison of month. Okay, so August compared to August, September compared to September. Okay, so now the next coming of October, okay, will be announced on the CPI October will be announced on the 10th of November. Okay, so we also know that November is a re-election of John Biden. Okay, so and we also know that during October the CPI is quite high. Okay, so when you come to October of a comparison, I think this CPI sure very not sure lah. Okay, I can say that quite confident it's going to drop to negative. Okay, so sure will be good, even though with all the price and oil price now stagnant, even though all the things still continue going up, because in comparison October by that time the inflation is super high because of the oil is coming up, and another one is a March. Okay, so when you have all this point there, okay, so when you come to the CPI on October, there will be a high chances the CPI will drop. Okay, this one will create a good news. And also October at that time is released on 10th of November. So very, very good conjunction with the re-election of John Biden. Okay, so by that time, I think the market should be have a rally up. Okay, so watch for this one, this rally. Okay, so high chances in data show that there's a good chance for Fed or any in the market to rebound the market, okay, to prevent any panic selling. Okay, so when you come to September, that time also, the next week, next month, on around also 10 October, okay, will be release of September CPI, but September CPI also actually is higher than August. Okay, so you might see some flat, maybe a little bit drop back to 0.0. Okay, but however, we see a significant difference is in October and also conjunction with the election. Okay, so this one, is it really coincident or something planned in the behind already? So this one we need to be we can continue to observe. Okay, so I will end my season here. Okay, so hope you have a good trading for next week. Okay, so hopefully this video can bring you a good information. And if you like my channel, you can subscribe and also click like for me. Okay, so we will continue to share more in the next season. Okay, that's all. Bye.